I'd like to start where Frédéric Oudéa finished. You mentioned it, I have dedicated the biggest part of my days and night, like you in another function, sometimes in similar functions actually, fighting the crisis for the last 7, 8 years. And there was a job that needed to be done. That is clear. It has been done. We've made mistakes. We've tried to correct some of the mistakes. This is what the call for evidence was about. And in a way, there is an ongoing call for evidence. So that means that financial market players that think that there is something fundamentally wrong in either a rule or most often the interaction between two sets of rules, because the negative interaction is sometimes intended, in which case we say, well, tough luck, this is exactly what we wanted. You don't like it, but it's the right calibration. But most often it's unintended. And then if it's material or significant, then I think we have a duty to fix it. And we have done that with the help of the European Parliament and the Council. This is the reason why emergency procedures are there. We can streamline the procedure very, very quickly to fix a real problem. And we will continue to do it. But apart from that, I would say my hope for the future is to put forward as little number of new regulation as possible. And this is a feeling that is very much shared by Vice President Dombrovskis. Not to put out of a job our friends in the European Parliament, but because the dust needs to settle. We have changed every each rules in the financial framework since 2010. And there is definitely a need for market players now to work with these rules, discover, colonize, if I may say, the new ecosystem and make it work, and discover also what doesn't work, which brings me back to my previous point. If we keep on changing the rules permanently, I think we shouldn't be surprised that we see not much long-term investment, which is one of the subjects of today. Sustainability is rarely short-term. So not only we should produce less, but we should, and I very much agree with what you said, President Oudéa, we should try to finish the repair for the past. There's still a few things. Banking union is one of them. But because repairing the past is also, if you do it rightly, is paving the way for the future. And we should definitely embrace the new challenges that are quite considerable. Sustainability, technological developments are huge challenges. They're full of promises, but they're also full of challenges. And it will be very, very easy to get it wrong, in particular for regulators, either by not regulating when you should have, or by regulating when you should have not, or by badly regulating. So there is a collective effort to be made to face these challenges. So I'd like to address briefly these 3 points: fintechs, sustainable finance, and the banking union. It's not to an audience of bankers or, I don't know, did you say them bankers, fans? No, passionates about banking, that I should say that financial technology is definitely changing the face of financial services, and this is only the beginning. Fintech plays a major role, be it for the development of the single market, for the banking union. It will affect, I think, in my view, quite considerably the way banking union develop. The capital markets union, maybe even more. And of course, we see it already, retail financial services. Fintech is a game changer. And as such, it entails, as I just said, a number of opportunities, a number of potential efficiencies, but also a number of disruptions that need to be managed. And in managing these opportunities and risks, of course, the job of a regulator and a supervisor is to try to minimize the risk and put the market in a situation to seize the opportunities. And that's a very difficult balance to find. as is evidenced by the ongoing debates, in particular on the revised legislation on payments, so-called PSD2, on which I think I have seen about half of this audience in my office, either to push for one solution or to push for the other. But that simply shows that the choices we make, first of all, are defining in terms of how the market will work, also costly for the operators, and there is also the question of the risk management, and trying to find the right calibration with all this, having an open market that is conducive to competition while managing your risk, is complicated. More recently, we have also launched a broad public consultation on fintech in order to try to identify what is needed from the EU in that market or in that activity. I would be happy to have as a feedback that nothing is needed for the EU, but that's not the feedback we get. We get the feedback that we need to do, or think at least, about a couple of things in order to make sure that the financial sector can harness the benefits from technology. If you're curious to know what this consultation brought, we just published the feedback statement that summarizes all the answers. So it's available on our internet, and you're very, very welcome to consult it. We are ourselves analyzing it at the moment, and on that basis we will work on a roadmap on fintech to be adopted early next year. Well, I don't want to anticipate the content of this initiative. I mean, I wouldn't be able to. It's very much work in progress with my colleagues at the moment, but I can maybe share with you where we see the most important opportunities and threats for the European banking sector, and as a result, the areas where further initiatives may be necessary in the EU. Incumbents insist on the need for a level playing field. But I think if there is something that you can find in virtually all the answers, that's as this: same activity, same risks, same rules. They highlight in particular anti-money laundering, security, data protection rules, as areas where this principle should apply and where market participants should be subjected to the same set of rules. This goes also for cybersecurity requirements, and several follow-up initiatives were also suggested in this area in order to try to enhance supervisory convergence. One of the challenges we will have to face in this area is the fact that the markets are global, very interconnected, initiatives flourish randomly in several jurisdictions. If the supervisors are not closely connected, we are taking risks here. Incumbents also agree that technology neutrality, proportionality, and integrity should be the principles to guide any regulatory approach towards fintech. Most industry respondents called for clearer and updated regulatory and supervisory framework for outsourcing, in particular as regards outsourcing to cloud services, in order to be able to get these cost efficiencies. And it's of course very important, in particular in the cross-border context, what I just referred to. And in this respect, the ongoing work that EBA is conducting on outsourcing is, in our view, extremely important. Looking forward, most respondents acknowledge the potential of other disruptive technologies, such as artificial intelligence, data analytics, or distributed ledger technology, even though at an early stage. So we are looking at these issues. We are looking at the suggestions that are made in the answers to the consultation. And we will, as I said, propose follow-up quickly. And we are now reflecting really as where is there a need for regulatory intervention or not? Is there a need for other types of intervention? Which ones and which form? in order to try to have something that is not a sort of one-size-fits-all. We have a regulation as the answer to all your questions, because no such thing exists in this, particularly in this field. But to try to have a granular and well-thought strategy to allow the market players, and in particular the banks, to take these opportunities that are offered by technological development. I'd like to close on this subject by taking a specific point that is very close to my heart. Many of you, when you responded to the consultation, said we need to have, if you regulate, and in some instances, a number of you think there is a need for regulation, particularly what you call enabling regulation, which ensure a level playing field, then you should regulate in a way that is adaptable, because the market in general, but in this field in particular, it's very obvious, will always move much faster than the regulation. And I have to say, and I say this as an acknowledgement of guilt, the things, the collective guilt that I share with the Parliament and the Council, we have in Europe a tendency to over-specify the legislation, for reasons that are linked to our complexity, that are linked to the fact that we are not a sovereign state, so we don't really trust each other. We don't even trust, usually, the institutions that we have created. So we have a tendency to put in level one things that in the US you would never find in a bill, because they would simply say, well, the goal is this, it's very clear, the means are that, and dear Fed or dear CFTC, your job is to make it work. I experienced that when I was negotiating with CFTC the equivalence regime for CCPs, because we had long discussions about whether we should move towards a common margining system, because as you know, that was one of the big contentious points. If we had agreed on something, then for Mr. Massad, it would have been sufficient that he goes to his board and say, well, listen, guys, I have discussed with the EU. We think this is the margining system that could work for us and for them. Do you agree? And if he had had a majority in his board, that was done. I would have had to draft a draft legislation and put it to the Parliament and the Council. And maybe 2 years after, we would have had the same margining system. So this real-life example shows that we're not flexible, and partly we could do something about it by empowering more our own institutions. Is one of the reasons why, actually, we decided to move forward the goals set by the 5 Presidents' report to empower more ESMA in the direct supervision of financial market. Because as the world becomes more international, as it moves faster, we need authorities that have the authority to decide and the authority to make agreements with their counterpart in foreign jurisdiction. Sustainable finance and sustainability at all is also a huge challenge. It's a huge challenge because it's existential in the end of the day. If we miss it, we might not be on planet Earth for much longer, certainly less long than we've been. So financing the transition to a low-carbon economy is becoming a key issue, and the Commission is certainly very dedicated a lot of resources to this, given the stakes involved. The estimates as if we want to bring back the economy in Europe on the 2-degree pathway, as what was agreed in Paris 2 years ago, almost 2 years ago, and I heard in the news 2 days ago that if we do nothing, we're on a 3.5-degree pathway. And a 3.5 apparently is going to be rather unpleasant. So if we want to move back to 2 degree, we're talking about 180 to 200 billion of investment per year. So that's huge, and this over 2 or 3 decades. So the Paris Agreement has definitely underlined how central the finance sector is to meeting this challenge, when making financial flows consistent with a pathway towards low greenhouse gas emission and more generally more sustainable development. So We have taken step recently to be up to this challenge, because we will do this only with all the relevant market participants, and in particular banks, because banks continue to be the backbone, and they will continue, I think, for long, to be the backbone of the European financial system and the European economy. So if banks do not finance sustainability, we will miss the target. During only the last 3 months, if I may quote a couple of things we've been doing, we have published new guidelines on non-financial reporting. We have launched the high-level expert group on sustainable finance that is shared by my friend Christian Timan, excellently shared, I have to say, and is working full steam and making an excellent job. They have published their interim report in July. They will publish the final report early next year. And we have had a public hearing on sustainable finances in July. We have made clear commitments to sustainable finance in the Capital Market Union midterm review, and the President Juncker very recently put it very explicitly in his State of the Union speech. And you can see already the first concrete actions, because if you have the courage to go through the 180 pages of the ESA package, the reform of the European supervisory agencies, you will see that we have introduced a mandate for them for sustainability. There is not yet hard law to be implemented in that respect, but we thought this was the opportunity to equip them with the powers already to care for this and have responsibilities in the homogeneous application of any European standard to come. We are also monitoring the evolution of all relevant initiatives internationally, and in particular the work of the industry-led task force that was established by Mark Carney on the Financial Stability Board. And as you know, they have developed recommendations for voluntary climate-related financial disclosure. So it is clear that we need a deeper re-engineering of the financial system so that it becomes inherently more sustainable. And the high-level expert group on sustainable finance has already proposed a set of recommendations in its interim report and is working on further recommendation that will form together a comprehensive EU strategy on sustainable finance by early 2018. What we intend to do is to bring a realistic but ambitious and pragmatic approach to this work. So we want that this work, but we don't want to sacrifice pragmatism to ambition or ambition to pragmatism. Usually you say, well, let's be pragmatic and under-ambitious. My personal view is that in the field of sustainability, being pragmatic is rather to be over-ambitious. So I prefer to be over-ambitious and slightly underachieve, than be under-ambitious and underachieve as well, because my experience of European text is that they rarely escape the machinery more ambitious than they entered it. So if it's only for me, we will make relatively bold proposals in that respect. So that's very important, and you will see a number of proposals in the month to come. Let me conclude by banking union. Well, banking union, as I said, will be affected by the evolution in technologies, and banking union is also an expression of sustainability. This banking union, after all, is one of the conditions to make the euro sustainable. And this is why it is absolutely crucial that we complete banking union, as again President Juncker put it extremely clearly in his speech. The experience that we have gained so far shows that banking union works relatively well, frankly. But there is no room for complacency. What we have put in place works well, but we have put in place half of it. So we need to finish the job, because it may not work that well forever otherwise. And it is a matter of urgency. I think it's Wim that mentioned it. It is true, or Frederick, I don't remember. It is true that a big international European bank has chosen to join the banking union by choosing to move its seat within the banking union. And it is true also that it is a sign of the recovery and the change of mindset vis-à-vis the Eurozone, and that is, of course, extremely welcome. It is also true that a number of non-Eurozone member states, some of which have a clear opt-out from the euro, like Denmark, have clearly stated that they're very seriously considering joining the banking union relatively soon. It's clearer for Denmark than for Sweden, but both have expressed the intention to look very seriously at this possibility. So all this is good news, but all this makes it even more urgent to complete the banking union. It is worth recalling that the creation of the banking union was preceded by a comprehensive asset quality review and stress test, which was followed up by a recapitalization exercise. So taken together, if you combine this with the huge work we've done to implement Basel III in Europe, I think it's fair to say that the foundation of the banking system in Europe are a lot more solid than they were in 2008. Here as well, maybe I make a parenthesis, but it's difficult to disentangle the floor, which are the ground rules for everybody, and the banking union, which is the structure to operate these rules. My view, Frédéric Oudéa referred to Basel IV, I don't like this word, is we finished Basel III. Depending on how you finish it, it may end up being Basel IV in terms of impact, but we finished Basel III. It is extremely important that we finish Basel III in a way that is conducive to allowing the banking sector to fuel the growth that we see at the moment in Europe. And that doesn't mean being soft on rules. Let me be clear about that. But I think you have to make a judgment whether once you have strengthened considerably every ratio you could, once you have gone into a significant and detailed analysis of the various portfolio of risks and how they're dealt with under internal models, once you have revised the standardized approach, I think there is a question whether what you need, first of all, do you need to go further? And if you need to go further, do you need to continue to work on the right-hand side of the balance sheet? So piling more capital, more debt, more financial means in the right-hand side of the balance sheet? Or do you need to work rather on the left-hand side of the balance sheet and go into asset valuation issues? And I'm deeply convinced that the latter is the solution. We need to tackle the issue of the valuation of non-performing exposure, how they're provisioned, etc. This is a real issue. This is not a general issue. This is an issue for some banks in some member states, but this is a very important issue if we want to continue to reduce risks in the banking union. So this job needs to be done. Basel can help us in that respect. Basel has helped us in that respect because all the work, as I said, that was done on risk portfolio was very important. But this is now what we need to do, and we will come with a very comprehensive agenda in 2018 on how to tackle NPLs in the banking union, but not only in the banking union, because as you know, it's an issue that is shared almost equally between banking union and non-banking union member states in terms of number of member states. In terms of volume, however, it's a banking union issue for and large. So, what needs to be done now, and I will conclude with this, not to be too long. Well, we need to finalize the negotiations on EDIS, the European Deposit Insurance Scheme, We have proposed this scheme in 2015. This is the third pillar of the banking union. Pro memoria, the first one is common supervision. The second one is common resolution. The third one is a common European deposit insurance scheme. And why is it important? It is important because, as you know better than I do, having a very credible and powerful single backstop that protects depositors everywhere, even in small jurisdiction, small banks, big banks, is absolutely essential to the stability of the system. What you need to avoid above all is bank runs. And we believe EDIS, in that respect, is absolutely key. And you need to remember, it's very interesting for those of you that like history, you may research why the US believed it was important to create FDIC. And they believed it was important to create the FDIC after a number of big failures in states in the United States. Because before this, nobody was in favor of a federal system. But after a couple of states in the US has been belly up because of bank crisis, they discovered the virtue of a sort of common insurance among themselves, and it works very well. We think we need it as well in the banking union. Finally, we need that the member states deliver on their commitment to create a strong and effective common backstop to the banking union. The banking union needs to be backstopped. It needs to be backstopped in a fiscally neutral way, of course, over the long term, but it needs to be backstopped. I mean, if you look at what happened over the summer, we had 3 banks in difficulties. These 3 cases were solved in different ways. They could have been solved in yet other ways that would have been much more costly. And I would tend to say that the regular way of dealing with these cases, which is a single resolution board takes over, we auction, you make a bad bank, maybe a bridge bank, that takes time. And during this time, you need to provide the bank with the necessary financial means to work. And for this, you need to have well-fed-in funds, and sometimes even with a limited number of events from not so big banks, maybe you need also a backstop. And certainly the backstop is key to the credibility to the whole system. So we very much hope that now that, in our view, a very significant amount of risk reduction has been achieved, know that further risk reduction measures will be taken in the area of non-performing exposures. The member states will move decisively on the issue of backstop. That concludes my remarks. So, as evidenced by the last bit, looking to the past is also a way to look to the future and try to pave the way for a sustainable future. I wish you a very full, productive, and rich day of debates. Thank you.